The way we see large deals really helping us to build a foundation into the future. And the win sizes, the overall win value is very strong at 3.2 billion, at 71%, very good to have the net new. That gives us, let's say, one piece of the revenue into the future. And equally, there are digital programs or other programs which are not something that clients are looking at in this environment, and that takes away a little bit from the revenue. So that combined gives us the revenue outcome as we see it, and as we as the outlook as we see it. So that's how we will put that together. On the margin?
Yeah. So on the margin, as you've seen in our disclosure, one is we, of course, given our wage hike from 1st of November, that's about 70 basis points of the drop. In fact, we've dropped 70. We've had another impact of 30 million between revenue and cost because of the McCamish incident as well. So that's actually a 1.3% headwind. We've compensated that at about 50 basis points of the Project Maximus, which now is in full flow. This is across, we've talked about 5 tracks and many verticals. And there's about 10 basis points, which is from currency. And then, of course, there's a balancing around furloughs, et cetera, et cetera. So we actually are seeing a very strong underlying margin movement coming because of Maximus. And, of course, the wage hikes, et cetera, were planned and known for and are leading to this margin gap for this quarter. We have a very, large and growing engineering business. We don't probably talk about it as much. It's a business which working with leading engineering companies around the world. And as you know, semicon is a space which is, expected from today a $500 billion market to go about $1 trillion. And this is a very exciting business in terms of semiconductor chip design, working with leading fab, non-fab players across the world. And I think it'll give us, firstly, a good entry into a new space and also a new set of clients which we don't have. So we are very excited about this.
Really, as we get closer to the end of the financial year, we've tightened the margin, the revenue growth guidance. The margin guidance remains the same. So in effect, really, the higher end has come a little bit low and the lower end has gone up a little bit. So we see the outlook in essence quite similar. But the guidance is tightened. That's how we're seeing it, based on what we've seen in the first 3 quarters, where our growth has been 1.8% in constant currency terms over the previous year's 3 quarters. And that's really all we've done with the guidance. On the budgets, I think that was one of the questions on what we're seeing with the budgets. At this stage, we've not seen any different behavior from clients. Typically, as you know well, Q3 is a quarter with large furloughs and other end-of-year holidays, and that we've seen continue. We've not seen either an increase or either a decrease. So the same sort of a view. Digital programs are fewer. Cost and efficiency, automation is much more, and generative AI has a lot of interest and traction, even if it's small revenue numbers today. Then there was a question, I think, about the MOU. We have no additional comment. We'd shared the comment in the statement we'd made, I think, some time ago in the quarter. This quarter has been, I think, very strong at 3.2 billion. If you look at the 9 months, it's the highest ever value of deal wins that we've had. Actually, it's more than what we had in the year before, where we had a very large deal in that instance. So we feel extremely good. 70% of this is net new, 71%. That again is extremely strong because it helps to position us for more into the future. The deal win from last quarter was also exceptional, but those are big numbers. I mean, 3 billion is really well above our average deal win in any quarter if you look back, let's say 8, 10, 12 quarters and so on. So we feel extremely strong with that, what we see going ahead. And these have deals which are related to cost, efficiency, automation, consolidation, new work on SAP, cloud, so a lot of different areas, which is good. It's across the portfolio. I think you had a question on our senior leadership team. Again, my sense is, we have an exceptionally strong team at different levels within the company. We've continued over the last several years and even well into the past, always promote a lot of people internally with larger responsibilities. We will do that this year and in the years ahead. And the type of work that we do, people have exposure to some incredible opportunities, both with clients, with delivery, with projects, and the type of projects we're working on are quite leading. So we feel good about that. In terms of some of the media reports you alluded to, we have no real comment on that. Large deals, more represent what is the level of connect we have with our clients for large transformation programs or consolidations or cost and efficiency programs. The revenue reflects both what deals contribute and then what programs clients are doing or not doing. For example, digital programs have been reduced in what we've seen over the last few quarters with clients. That really combination gives us the outcome for the revenue, and we'll see how the global economic environment evolves, and that will tell us when that comes in. Financial services, high tech, telco, where we still see impact in the market. We see growth in manufacturing, energy utilities, life sciences. So we do see both of those things. In geography, similarly, we see impact in our North American business, but growth in the European business. So it's not sort of one thing for all.
Furlough is a seasonal industry impact, and it's reflected in the -1% constant currency decline. So it's part of that as well. In terms of headcount, we had already told you all last quarter that we have a lot of utilization headroom still. In a way that was led to the 6,000 odd headcount reduction. We are still at 83.7, and our comfort range is between 84, 85. So we still have some capacity, and we can always crank this up by taking more trainees on short notice as well. So our model is very flexed in terms of ability to recruit fast, train them fast, and put them on production. So that in that sense, I think we are in a good space in terms of ability to capture any future growth.